Yalla Habibi.
It's good to be here at the main blockchain event of this year.
You get to speak to the smartest people like you trying to figure this out, but also the people on stage. They're the experts. What more can you ask? It's a brilliant, brilliant event, and you'll come away with lots of new ideas and a better understanding of this incredible exponential world. So we get all of that, all in one place. See you at Token 2049 in Dubai.
Consensus Hong Kong 2025 is where the global crypto community converges to shape the next era of Web3. From February 18th through the 20th, Hong Kong becomes the meeting point for leaders across finance, technology, and digital assets. This isn't just a conference, it's where deals are made, partnerships are forged, and new opportunities emerge. Consensus features exclusive networking lounges, expert-led sessions, and invaluable insights from top industry voices. Whether you're expanding your network, building your brand, or closing your next big deal, this is the event that moves markets. Visit coindesk.com/consensus-HK to secure your spot and use Real Vision 15 for 15% off. Don't miss your chance to be part of the industry's defining moment.
Welcome everyone to this Friday's episode of REKT Vision. Today we have substituted Mando for Jamie Coutts in an effort to raise the mood and the vibes after our rather depressing show to kick off February last week. So Mando out, Jamie in for this week. Welcome back, Jamie. How you doing?
Hey, Ravi, it's nice to see you.
Yeah, good to see you too. I'm actually in Paris right now for NFT Paris. Apparently there are still NFT events that happen every year still. I think it's funny because it's called NFT Paris, and I don't think I've been to a single actual NFT event. I'm on two panels today. One of them is trading meme coins, so one of them is a market update. So I think NFT Paris at this point is probably just some sort of branding, but yeah, it's just like everything is like meme coin focused, AI focused. I don't think I've seen a single NFT booth. Even the Yuga Labs guys, which I guess would be Bored Apes, even their booth is Ape Chain and Apecoin. So yeah, pretty amazing how that's all changed.
That's got to be a pretty good contrarian sentiment signal, though, right?
I think so, yeah. I mean,
can it get any worse?
Can it get any worse? Yeah. Price action for NFTs hasn't been too bad. You know, there's been pockets of rallies, and it's not like it's just been down only anymore. I think, you know, things are relatively flawed. Obviously, it seems like some of the larger projects, the game there has been to launch a token. So the projects that have not yet launched tokens tend to be the ones with slightly higher floors. But yeah, I mean, volume and activity levels are still not even 10% of what they were back in 2021. So I don't know. I don't think we see that same mainstream mania that we did 3 years ago, but I do think there are pockets of potential performance. But we'll see. I don't know. I'm yet to be convinced. I'm yet to be convinced.
Well, if you're saying that prices have actually come up a little bit, or they're stabilized and sentiment's still falling, I don't know. It was always a play like on the sort of mid to later stage of the entire cycle, which arguably you could say is roughly where we are. We're definitely not at the start, and we're not at the end either. So I don't know. It feels like I need to go and actually start looking at the space. Like, I am the worst NFT advisor or expert. So I've never really looked at it. It's never scratched an itch for me. Not until music comes along. But just based on what you're saying, it's starting to sound interesting given where I think the market's going to go.
Yeah, I mean, it definitely formed the later part of last cycle. Like when NFTs really kicked off, it was towards the end, and NFTs continued performing actually even into first half of 2022. But my view on it is just every crypto cycle, there's some form of narrative, which is the casino narrative, and then 21 it was NFTs, 2017 it was ICOs, 2020 it was DeFi, 2024 it was meme coins. This year potentially AI. That's remains to be seen, I think. So yeah, I don't see it coming back in that fashion, but we could potentially see some performance. I think towards the end of the cycle, which we're also trying to figure out when that will be, if it will get there. I think I'm subscribing to the view that Bitcoin is kind of no longer going to be in this 4-year cycle and will sort of be its own thing as a much more mature asset now. And look, we can look at the altcoin sectors and how also perform versus Bitcoin with BTC dominance still close to the highs, but it feels like we've already had that underperformance or big sell-off in alts. So,
hi, Raoul here. Listen, I think we've got until 2030 before the economic singularity arrives. Now, it might not be the exact date, but it's around then. So we have about 6 years to figure out how to unfuck our future. I've put together a report to help you called Prepare for 2030. It's going to help you take the first steps in that journey to make sure you're secure past 2030. So just click on the link below and start your journey now.
Yeah, I don't know. I'm curious of your thoughts on, can we get a rebound in alts? Will we ever get an alt season? Did we get a very brief alt season around this time last year and that was it? Or was the altcoin season just meme coin season last year and that was it? It's hard to get your head around it now, especially at these levels, I think.
Yeah, I've got a lot of index data now. So part of the Pro Crypto product is sort of bringing some index data to light because there's a lack of that in the entire space. So now I'm able to break down all the different sectors and subsectors. When you go to subsectors in crypto, it gets a little bit difficult because some of the subsectors don't have enough assets in it to really constitute. So you look at the sort of sectors, and there's 5. And there's digital currencies, which essentially Bitcoin and the Dino coins, I unfairly call them because they've still got massive whopping market caps. And then your meme coins. And there's a smart contract platform sector, and that's about 22% roughly 22%. I think my last check was, and then, so you put that with the digital currency sector, and that's 95%. And the other 3 sectors are DeFi, applications, which is just a name or a general name to give all the other stuff that you don't know what to actually call them or where they should belong. And then there's another sector called infrastructure, which includes a lot of the oracles and AI type stuff, compute and whatnot. And I can sort of see, if you look at all the different sectors versus Bitcoin versus digital currency sector or versus just the overall market, which is heavily weighted toward Bitcoin, it's all been trending down in this very clear downtrend really since 2022 with just some counter trend reversals. But when those counter trend reversals happen, they're spectacular. And the 2 that we've seen 2 essentially altcoin rallies or outperformance periods. As you said, it was at the end of 2023 and 2024, and that was pretty substantial. There was some real big outperformance there. And that happened just at the time that everyone said, alts were dead. And then we had a mini one in Q4, which pretty much ended by the start of January. It was smaller in scale. And that was, so when I look back at the last cycle, you had about 3 of those big moves, or 3 or 4, you could argue. So I still think that there's going to be juice in this market for altcoins to outperform. And if we believe that blockchain adoption is going to continue to increase, capital will flow into not just Bitcoin, into other networks. And when you look at the amount of fees some of these networks are spinning off, it's remarkable. It's starting to get very concentrated in the smart contract platform with Solana and Ethereum. But I think there's so many announcements coming out in the last couple of weeks of so much more activity happening on some of the other chains. Is yet to realize substantial amount of fees. But I think, that there won't be 2 chains in 5 years' time, there will be, probably 5 to 10 chains. It's everyone's sort of objective to sort of try and find which ones will be, those second tier chains. And when you think about applications themselves, like some of these applications that are sitting on these chains, either they're sort of mainly DeFi type tokens, they're trading on like 1, 2, or 3 times their fees. So effectively the equivalent of like 1, 2, or 3 times revenue. Some of these applications are no longer like super expensive, right? And in many cases now, especially with the regulatory changes, they're going to be returning capital or find a way for that for value accrual in the underlying token. Uniswap comes to mind. So, I mean, it's extremely bearish. The problem is you've just got this constant fucking dilution, right?
Yeah.
So many, whatever the number is these days, I think it's like 7,000 coins plus God knows how many millions of meme coins. You've got 2 problems. You've got dilution from just so many new coins snapping up attention, but you've also just got the inflationary nature of a lot of these tokens. And until they get mature enough or they get traction enough, that inflation doesn't come down. And that's why you've got it's hard to be, an altcoin. It's an altcoin investor because you're fighting a massive tidal wave of supply. So go where the activity is, go where the usage is. And it's pretty clear. You look at the on-chain data where that is. And if you're sort of exposed to those, it doesn't matter if you don't get this massive whopping 2017 alt season. It doesn't matter if you don't get the 2021 alt season. I think you'll do really well having some exposure to altcoins where you can see people are using the chain.
Yeah. I definitely agree with your point on delusion. It's like one of the criticisms of ETH right now compared to perhaps 3 or 4 years ago is that the kind of ETH scalability narrative has been L2s. And so there are now so many L2s that you can buy, and which one do you buy? And it sort of dilutes the attention and the capital for ETH alone. And then if you expand that concept to the altcoin market and the L1 market, it's a very similar thing. It's like, okay, do I buy Solana, Sui, XRP, ETH, say, like I feel like there's like 3 or 4 times more options for L1s now than there were 3 years ago. So it's hard to if you want to express a view on Altseason, that's maybe like a general view. It's really hard to pick which one could potentially be the winners. I guess you could buy a basket of L1s, but it then feels like you're just like offsetting good performance and perhaps Sol versus like some of the other stuff if you look at that basket last year. So it's really hard. Like I found it really hard to express even just like I want to outperform Bitcoin. What do I buy? Like it's been really hard to express that view, I think. And last year you could have done it with meme coins, and then after the whole pump.fun thing, it's just even with meme coins now. Right now a good meme coin will have a lifespan of about 24 hours, and then it's just like okay, sell, move on to the next one. So it's just really hard to pick things that give you that outperformance against Bitcoin. And I know lots of people watching this show will maybe benchmark themselves to a stock index or something else, but people who are like really fully crypto native do benchmark themselves to Bitcoin. And many people will maybe even benchmark themselves to something like Solana. So it's just becoming increasingly hard to outperform it. And my hunch is that you have to kind of like pick a sector that will have some sort of a narrative. And it was meme coins last year. And my hunch is perhaps it still could be the AI sector this year. I know it's, if you look at the AI agent market cap, it's down 75% from its highs or something like that. That's the only thing I can see like fundamentally that could potentially have a strong enough narrative to outperform. Otherwise, there's stuff like Monad and Mega ETH that are coming, which are heavily anticipated, but it just feels like it's the same thing. You buy one of these coins and then 3 months later, there's another new one. And then you have to make the difficult decision as to whether you want to rotate, what you want to rotate into. And it's been very hard to just buy and hold something other than Bitcoin. And I guess Sol continues to outperform and gain dominance. And on the previous slide that you had, where it had the dominance numbers, like it struck me that Sol dominance is just 3.2%. Potentially, looking at that against ETH or against Bitcoin, that's something that potentially I look at as maybe something that could rise, because every single new coin and all the activity still seems to be, all the TVL still seems to be on Sol. All the fees generated are predominantly from Sol ecosystem coins. So I guess that would kind of like be my bet. But
yeah, look at the problem with all of those other sectors is, as you described it, narratives. Like everyone in crypto loves the narrative play because it's worked in the past. I think there's just too much competition now. And with all the supply that's going on, a narrative can take hold, as we saw with AI agents and AI infrastructure in November, December. But by January, it was pretty much petered out. Now, like there's a lot of potential in that space, but like it's really the unsexy way to sort of build a portfolio in crypto. But like, why not just do the picks and shovels? Where are the AI agents operating? They're predominantly on Sol. They're predominantly on Base. Yep. So you can form a portfolio. You can create a portfolio based on boring old fundamentals, and that's why I'm skewed to Bitcoin massively, because product market fit, growing network. You can't say that about a lot of these other L1s or other applications, but yet there are other applications and L1s that are growing faster. And it's a question of just sort of what's the right position size to try and get that little bit of outperformance, and also trying to understand where we are in the cycle. It was November, like early December, I was on Twitter and writing about it, just that, you could see all the macro conditions tightening, like the dollar, the DXY had rallied from 100 to sort of 105 in a straight line. And it was touching on sort of, 107 at that point. And I was like, well, that's the top of a range that it's been in for 2 years. If it breaks above here, it's bad news. And, and predominantly talking about Bitcoin at that point. And if people didn't believe it. And so, like, of course, everything is going to go down, especially the narrative-driven sectors that don't have yet the fees, the adoption to justify their valuations. So, everyone went all in on a narrative, and you have to be a bloody good trader. You have to set price targets, up 50%, up 100%, take it. But everyone's looking for the 10x, and then suddenly it's now their AI positions are long-term investments. Sorry. It's a really unsexy way to think about the space, but like, look at the volatility of the asset class. Like, it's bonkers. People just make it really hard for themselves by going out the risk curve a bit too much.
Yeah, no, I hear you. It's just like, there's no asset class that has this level of volatility, even Bitcoin alone. And then if you extend that to the thought of like alts and some of the lower caps, it's pretty insane. And it's just like, I don't know, it doesn't matter how good a trader you are, it's impossible to navigate that perfectly. It kind of just feels like you're flicking a coin for the most part, unless you're privy to seeing all the flows and etc. and knowing what's going to come next. But otherwise, I think it's pretty challenging. What do you think happens to Bitcoin dominance has risen substantially over the last 2 years of what we feel like we're considering as a bull market. In the past, we've seen Bitcoin dominance rise, and then we have this great big alt season, etc., and Bitcoin leads first. Maybe this time is different because of the ETS plus the sovereign game. But what do you think happens to Bitcoin dominance if we move to a bear market? Because we also typically see it rise then. Let's say in 6 months' time things turn and we haven't really changed from the levels which we're at now. Does that result in Bitcoin dominance going above 70% and even higher than where we are now? Like, I'm trying to wrap my head around what happens in that situation.
Well, yeah. So if you're talking about Bitcoin dominance being at, I know everyone refers to the trading view metric, so I can't remember where that is, but my Bitcoin dominance versus the top 200 assets, I think is around Yeah. Did you mention 64%? I think
I said 60. Yeah, 64. Yeah, exactly.
So everyone talks about the trading view metric because it's accessible, and that's like 50, 55 or something, or maybe 60%. So people are probably freaking out when they're looking at this number versus the one they're used to seeing in trading view. So my view is that it'll be lower by the end of the cycle because there will be a push higher and capital sort of distributing through, not through the entire space. Like that's the thing. I just do not think we're going to see the rip roaring alt seasons of the past. We don't have the kind of liquidity of the last cycle, like, direct checks to consumers or to taxpayers created the conditions for, batshit crazy alt season, right? Everyone's stuck at home and then everyone's just flicking narratives and memes, and that's not going to happen. But as more institutional capital comes in, ETFs are being filed across a wider range of assets now. So Solana and Dogecoin, but there are other ones. And then you'll start to see creative, index products for DeFi and other sectors and blends of certain things. And that's what institutional investors will want. So I think we'll get a period of outperformance, but it'll be so selective. And that's why I keep banging the table. Like, look at the activity, follow the activity. That's what drives prices. Like, liquidity drives the asset class, but really, if you want to be a crypto asset picker, try to use some sort of fundamental rationale for it. Which chains or which applications are growing fast and are not really overly expensive. So, I would expect that number from 64 to be somewhere lower, under 60%. But if you're saying that it's going to finish the cycle where it is today, then in a bear market, Bitcoin will outperform everything else for sure. It's just higher beta in the rest of the space. So I'll push it to 70s and like maybe even 80%. But I think it'll maybe end the cycle. Like, this is a really hard number to pinpoint. It'll be lower from here is my suspicion, even with all the sovereign investment that's going on, but probably not a lot lower. And therefore, it's probably 70% in a bear market, easy.
Yeah, that makes sense. I'm curious to see the other chart that you had up a moment ago on the Altseason Indicator. So talk me through what this means and what we're looking at here.
Right. So this is looking at the top 200. So I use an index provider called Bitformance, and they have like really robust data at sort of the accessible to punters, because a lot of the institutional index providers, and I've worked, I built the Bloomberg index classification system. You'll pay, an obscene amount of money. So it's not really, it's for funds, it's for ETF providers. It's not for the general public. So you've got the ability to access this Bitformance product, which I think is pretty good. And so what I've done is I've just created an index of the coins outperforming Bitcoin on a 90-day look-back period and mapped it as a time series. And so when you see these large spikes, it goes from 0 to 1 or 0 to 100%. When these numbers here, like if you look back to 2021, when we said the all-time high in the Altseason Index, what that was saying was that 93% of the top 200 at that point in time were actually outperforming Bitcoin. So, when you get up to anything around 70 to 80%, and you're holding a bunch of alts, you've probably done well, but you should start be looking for the exits, because that's when things are just way overheated. And so if we look at the bull cycle that started in, the end of 2022, but really for the broader market, it was 2023 because Bitcoin led and the rest of the market didn't even wake up until mid-year. We've had this one big, rather big one here in 2023, Q4, and then we had this really sharp but short-lasting spike in November, December recently. So if we go back to 2019, 2021, the last bull market, you had 1, 2 here, you could argue, and this was pretty sustained for a while. And then 3, then 4, and then, the last one was about 70% of the alts were outperforming. So, 4 to 5 sort of bursts. Here we've had 2. look, if we get liquidity liquidity hasn't even started, and there's a big problem that they'll need to do something sooner rather than later with this sort of this geopolitical game that's being played. So while everyone's, shitting themselves over their positions and the market, we're getting closer and closer to some action on that front. And so if global M2 is currently around sort of 105 and it expands by 30% generally, like just based on the last couple of cycles, and the low was 90, we're probably looking at another 20 trillion in global M2 or the money aggregates of various top countries. And so that will fuel investment in everything, all assets, property, risk assets, but obviously crypto, and because it's it's a small asset class will go up, and so alts will benefit from that. So I think there's another one or two bursts higher. But as you can see, like Sol's outperformed Bitcoin this cycle, and XRP and some of the other ones have done really well, if not outperformed Bitcoin as well. It's just the nature of the beast. But there's like L1s that have got traction, and Sui's gone from no users to 700,000 daily actives. They're starting to get some dApps. They're starting to see some DEX volumes, TVLs flowing in. So it's got the signs of network activity picking up. There's assets to be looked at, but it's fairly narrow at this point because the activity is fairly concentrated.
What's interesting to me about this chart is the last time we hit 0.8 on it back at the end of 2024, that was right around when Trump got elected and people were talking about Bitcoin Reserve. And the time before that looks like it was perhaps December 23, January 24, which was when we had Bitcoin ETF. And so it's kind of interesting to see that actually like the two big market things, which have been like very Bitcoin focused, have seemed to be the times when alts actually outperformed into it, because maybe that's when everyone just goes risk on. But the move following that is just like like a down only pattern for this. But I wonder if like the next, like I'm always a believer in, I understand like charts and seasonality and that kind of, and momentum, etc. But I'm always a believer there's some sort of fundamental narrative behind that to perhaps explain it, or that sort of times up well with it, that people are positioning around. So I wonder if like if we get to a potential approval start of a Bitcoin Reserve, which maybe the time estimate for that is something like 6 to 9 months. We haven't had any information yet, so I'm just completely guessing there. But I wonder if we get as news flow intensifies around that, if that ends up if ironically again that ends up being the sort of like fundamental catalyst that actually causes alts to outperform again. And then we'll see what happens after that, because maybe it's once again short lived. But it seems like the big positive market news for crypto have generally been Bitcoin focused, and in order to speculate on that, degens seem to want to gamble on everything else other than Bitcoin, which is like alts and memes and all that kind of stuff, which is what causes these like very short lived spikes, because it's obviously not very sticky capital compared to the capital that goes into Bitcoin. So I'm curious to see if that's something we see play out this year. We should definitely circle back on it.
Yeah, I think it's just because it's it was deemed a commodity by the SEC, so it's in the clear from a regulatory standpoint. It has global adoption, which is superior to every other asset. It has, arguably the best product market fit. It's the most decentralized. The amount of hash rate on the that's securing that network is many, many times, or the compute of the largest companies and nation states in the world. So everything happens first to Bitcoin. That's major. First one for an ETF. First and personally, hopefully the only asset the US puts in some sort of strategic reserve.
Yeah.
I just do not buy the argument from people's, flogging their own tokens that should be included in, in a strategic reserve of a nation state, let alone the world, the world superpower. So, yeah, I mean, it's just it all happens to Bitcoin first, but it also overshadows. I mean, it does overshadow all the other amazing developments that's happening across the ecosystem. Like, we understand that blockchains have attracted a certain type of user up to this point, or a majority of users up to a certain point who are basically gambling or trading, whatever you want to call it. But it's basically proving out the infrastructure that is the blockchain to come what comes next, which is tokenization of real world assets, financial assets. And we're starting to see that Ondo just basically launched its own chain and is partnered with the who's who of traditional finance to bring stocks, bonds, you name it, on chain. Every single bank has got a tokenization team by now. And if they don't, they should be a little bit worried looking over the shoulder. So that is going to happen. So it just feels like Bitcoin overshadows the other stuff. And it is, to a large degree, degenerates trading and having fun. But it shows that this infrastructure is actually the infrastructure of the future for financial rails. So, I think it just overshadows things. It'll probably be a Bitcoin announcement or a Bitcoin development that pushes the market up. But, below the surface, there's just a constant stream, Visa integration, Web2 companies integration, you name it.
Yeah, that makes sense. I think it's something that's worth talking about, again, kind of on the same path that we've been on for the show is ETH. So ETH BTC is, I mean, God knows, the lowest it's been in about 2 or 3 years or something like that, is my guess. But we did see this week the CBOE filed with the SEC for approval of 21 shares staking ETH ETF, which is a big thing in the TradFi world because everyone loves yield in TradFi. What do you think about this chart? Like, there's a fundamental narrative there, which is the only other coin with an ETF, a staking ETF, I have to imagine would see a decent amount of inflow. Is that something that you think ties with the potential reversal of this? Because if there's one other, I don't know, if there's one other thing other than Bitcoin that does have a very strong story, I think, is still ETH. And, I understand that a lot of the activity, et cetera, is on Sol, but from a higher level, the decentralization of ETH, I think, commands, I don't want to say greater superiority, but maybe allows for greater capital, more stickier capital to be invested without feeling like it needs to dart to the next favorite L1. So I don't know, what are your thoughts on this chart, potential reversal? Do you think staking ETFs and yield is something that's going to move the needle? Because the ETF flows, which have picked up a little bit this year actually, are still completely dwarfed by what we've seen for Bitcoin ETF.
So I'm actually, I think we're rapidly approaching a pivot in Ethereum performance. Things are really, really bad at the moment. Against Bitcoin, I think we'll see outperformance coming soon. So I just tend to wait for the bottom to create, and then a discernible break from a trend. So right now, if you look at this on the chart, you can see that it's just it's like trying to catch a falling knife. Interestingly, just looking at the RSI on a weekly, so RSI weekly divergences are more powerful than daily because there's just too much noise. And we've got a bullish divergence on the RSI, the weekly RSI, because this low on the RSI is, this low here, the most recent one, is higher than the previous one, even though the price action went lower. So that's a interesting bullish divergence, but it needs to sort of formulate, it needs to break out of the downtrend for me to buy the story. But I think that it is picking up for a couple of reasons. Like you mentioned, the ETFs and staking that will play really well into private wealth and institutional investors. And then, if Raoul's view on this, if you look at his research, is he's very much convinced, looking at previous cycles, that the ISM breaking or the ISM reversal above 50 is when Ethereum has started to really outperform previously. And that was sort of early 2021 in the last cycle. And we're sort of like, it's just I think an elongated cycle. Everything's been drawn out a little bit longer. Liquidity hasn't come as fast as perhaps what we would have thought. So, I think Raoul's pretty, well, I can't speak for him, but I think he thinks based on historical correlations that, ETH is going to start looking interesting here as well. It's what's interesting is like the Ethereum Sol cross. So to sort of answer the question, it's like, yes, I think actually now things are as bad as they are. The Ethereum chain is, from a network effect perspective, growing. More L2s are joining. That's compensating them for the massive cut in fees after Denkun. So they're edging towards sort of deflationary again. When activity really starts to increase with liquidity and just more adoption and corporates coming on and all this all this tokenization that will happen a lot on Ethereum, more so than other chains. Not to say that won't happen on other chains. So that it's all setting up really, really well for Ethereum, Bitcoin to reverse, to have Ethereum outperform Bitcoin. But when I look at the activity that's happening on Solana, it's eating so much of that market share of ETH. I think Sol continues to outperform Ethereum because they're growing faster, at least at the base chain level. And Ethereum's network may be growing faster because Skull is multipliers of L2s, but boiling it down to the fees that the validators get on the Ethereum chain and the Solana chain, like Solana is getting rewarded for massive growth. It's still highly inflationary but it's growing a lot faster. And like that difference in market cap between the two feels like it has to close.
Yeah. Do you think we see a flipping of Solana versus ETH market cap?
Nah, not this cycle. I mean, if ETH goes up, it just makes it harder for Sol to chase. And Sol's getting bigger and bigger as well. Like there's a premium there for a reason. I just think it will narrow, it will collapse a little bit. But Ethereum is, the big daddy of like smart contract platforms, most decentralized.
Yep.
Different infrastructure. And I think the market feels that deserves a premium, but that premium will narrow or shrink a bit.
Yeah. We all know how fickle the market is. It just takes the direction or the momentum to shift, and then suddenly everyone brings back the past narratives that we've seen. It's one of those things where you get the staking ETF and you look at this chart, and then you start to see ETH move, and you see this, whatever it's two handle now, it's ETH is like 2,600 or 700. I don't think it will take a lot for people to start to buy into that trade. I'm not sure what the timing of this would be and when we would find out, because I guess it's now with the SEC to approve or reject this.
Yeah, I need to look into it. Look, my old colleagues at Bloomberg Intelligence, have their ears to the ground on the filings dates when they think, things will get approved. So there's probably the best resource for tracking that stuff. But now, the market's catching up and there's a lot of good intel on the street. But I'm not too sure. I guess the one thing I would just bring up on this chart is that I'm just added in here CME futures positioning, and it was so like the most short going into that sell-off of late last week. There was so many liquidations. It was one of the highest liquidations as a percentage of ETH market cap. I think even higher than the lunar sell-off in Q2 of 2022, I think. So like how meaningful that the liquidations were, the long liquidations. And usually long liquidations that are a couple of standard deviations above the norm and at levels where historically capitulation lows have formed, like Q2 of 2022, like ETH bottom before Bitcoin around Q2, Q3, and then Bitcoin bottoms in Q4. But like that feels like a complete capitulation washout situation.
Yep.
So it's got the ingredients for a big time reversal.
Yeah, I think that's something that had been widely commented on, with the OI on ETH being the highest it's ever been for a long, long time. And that I can't remember what the notional value of that was and by how much it got taken down, but it does feel, I mean, just looking at this chart, you can see quite visibly, it does feel like we've had the biggest flush out ever of that in terms of ETH positioning. So yeah, I mean, like that plus where we are on this chart, you know, the ETH BTC level is back to where it was, back to the lows of where it was in 2021, plus a potential staking ETF. Kind of, you know, if you can't move here with all this going for it, then I'm not sure what will move it really. But
yeah, exactly. I mean, you've got probably you've got an opportunity, you know, to put on a long trade here with a very tight stop loss. That's the benefit of like maybe taking a view ahead of the reversal, because you've got a very definitive support line there. So the question is, even if you get it right, is it going to outperform other things? Like it'll go up, but you know, you'll be sitting there going, well, Sol's going up 2x what ETH is, or some of these other ones or apps. So that's the question. So I would look for the reversal on the ratio chart to really like sell me the story that it's now time to own ETH.
Yeah, I think personally, I have too much PTSD from trying to long ETH for the last 12 to 18 months and never really working, or I guess the mistake I've really made is catching these moments, these bottoms, but holding on to the trade for too long and, you know, expecting that, okay, we've had this move, but it should really, you know, it should really be like this big move here and not taking profits when I should have, because we're expecting a larger move or at least playing for a larger move.
It's been a bitch,
I think
right? It's faked. It's faked on 2 occasions. Like, back in sort of mid 2024, then there was end of last year. So yeah, it's been super difficult. Each time it looks like technically it's like trending up, but still, even when it was trending up, it was lagging the market, and that was telling you something.
Yeah, exactly. Like it was a market move higher with an underperformance in ETH, which meant, you know, you'd be better off in Bitcoin or Sol. And that was the great barbell trade last year. I don't know, part of me still thinks it's the barbell trade for this year as well, but kind of feels like it might be worth having some sort of position on ETH. I guess it's just the other thing as well, like, you know, for people who are very ETH heavy, they may benchmark themselves against ETH and think about, okay, what's the beta trade here? In the past, it was perhaps like Arbitrum or Optimism and, you know, maybe even Polygon 3 years ago, but now there's so many L2 that I don't even know what I would pick to express that.
I'm
not that bullish on meme coins anymore, and that was a way to outperform that. So I think like DeFi could potentially have a resurgence, but especially under this Trump presidency, and if they have the ability to distribute fees to token holders, like that's something I think looks interesting.
I agree. Like what's going on in the DeFi sector is extremely interesting. So I wrote a report for Pro Crypto back in December now. It was bullish, but I was looking at the price action and it just looked like it was going to come off and liquidity wasn't there. So it's round trip since then. So you've had these 2 big spikes since really 2023 bottom. And it's like, you know, this is essentially it's gone up 3.5x.
Yeah.
And the last one from the lows of last year was 2.5x. But so you get these large moves, but round trips, it's really, really difficult. but then again, the fundamentals in that DeFi space, if you look at like the top protocols, how much fees they're generating, the ones that have been around for a while, and then you've got newer protocols that are actually outcompeting the Uniswaps. And I think maybe Morpho is doing more than Aave. I could be wrong, but it's a relatively new lending protocol. But you've got still with those old tested protocols. When I say old, like what are we talking about in crypto? 6 years. So, but they're battle tested through bear markets, through massive liquidation events in the markets and counterparty failures and whatnot. They've come through. They're building solutions for institutions to use them in a secure, permissioned, or KYC way, and they're cheap. Like I've got a screen which I won't show here, but I'll just talk through. It's like some of the price to fees or market cap to fee ratio for a lot of smart contract platforms like the chains are hundreds, sometimes thousands. And some of these protocols are trading at 1, 2, or 3 times their fees. So I just think about this of like, where are we going? Institutions are going to come in. What are they going to look at? They're going to look at valuations. No one gives a fuck about valuations in crypto. They don't even know what a valuation is. They think like looking at, Twitter mentions is a valuation metric, like market cap to Twitter followers or Telegram followers. Like, yeah, there's probably some signal there, but like you're not going to get institutions coming in on that. And what they're going to do is they're going to, do the old boring modeling that they're used to when they look at financial companies or any company. Look at the cash flows, look at the earnings, and they're going to work out like, okay, what's appropriate for these assets. And they're going to look at a lot of chains that are trading on hundreds or even over 1,000 times price to fees. And then they're going to look at the apps and go, right, well, these things are trading on like 1, 2, 3, 4, 5. Some of them are 10 times, which is, still incredibly cheap. And then they're going to think about, okay, so what happens in the future? Like, are users going to give a shit about whether they're using a chain, a specific chain? They're probably going to come into crypto through an app. And that app is going to be multi-chain and abstract away all the complexity of choosing or swapping between chains. And so they look like really undervalued assets in this ecosystem at this point because they only represent 1% of the top 200 market cap.
Yeah. I think it's something that's worth looking at. And I think one of the things that really crushed DeFi was regulation for the last, 2-3 years. That's now going to change. And as you said, like if you look at some of these multiples, a lot of the stuff screens extremely, extremely cheap. I mean, I don't know if you ever looked at Radium, for example, on Solana, but like the annualized fees they are generating there is like a crazy. Oh yeah, great. We have the numbers here.
Yeah.
It makes this look like very cheap just because of all the activity that we're seeing on Solana. And, every pump fund coin that graduates has a Radium pool that's created, which is, I don't know, something like 15 to 30 tokens a day. All the fees generated from this come from, stuff like the bigger meme coins like Trump and Melania, that kind of stuff. I think there was one day when Radium made like $32 million in fees when the Trump coin came. So
that's more than all smart contract platforms make in a day.
Yeah. It was like I think it was like the top fees generated on like everything basically on that day. So
yeah, and so this is data as of the 9th. So daily fees on that day on a 14-day average was 5.8 million. It's fallen 29% over the last month. Price has actually outperformed that, which is interesting. It's usually fees and price are pretty correlated. But over the last 3 months, fees are up 100%, like as you're saying, capturing that January period. So price is down over 3 months, 16, 17%, and fees are up 100%. And, daily active users is 2.9. And we all know that daily active users is a pretty lousy metric because a lot of fakeness and spamming and whatnot. And, a lot of that activity has sort of been definitely happening on with Radium. But you can't escape the fact that this thing is actually generating. I don't know what annualized that 5 or 6 million up is, but if you look at it on a, have I got the? Wow. Okay. So
Yeah.
Network value to fee ratio, which is I just call it something different, but it's like maybe price to sales if you're a TradFi guy, is less than 1. Right. So that's annualizing their fees, by the way. So the question is like, is it sustainable? Is because this is open source software. So what happens if someone forks Radium? It was probably a bit more difficult on Solana, but like on Ethereum. Like, so what sort of moat do they have to defend their business going forward? And that's the breakneck sort of technological war that happens in this space to try and keep ahead of competitors. But like, at least right now, looking at it, it's incredibly cheap versus the whole space. And if you look at just the whole DeFi economy, there's 5.6 million daily active addresses in DeFi right now, and it's generating 30 million a day in fees, which is more than the base chains. Yet they trade on multiples of. So that's my compelling case. But at the same time, like, the chart sucks. Like, it's not a great chart.
It's not a great chart. Yeah, it just you look at that, and that what you just mentioned, like fees up 108% while price is down 20% in the same period. It's kind of crazy to see. I look at all this and I just think like it's just another reinforcement of the fact that if they're able to turn that fee switch on and distribution to token holders, which is a possibility, I think at some point, that all of this stuff could really move a lot higher. I mean, Radium and I think stuff like Hyperliquid, they do buy and burn tokens with their fees. And I can't remember the exact proportion in which they do that in and what the numbers look like, but that looks very compelling too. But for whatever reason, it's just not strong enough for people to like jump onto the trade. But I think, if you're able to distribute fees to token holders, again, that's like a big TradFi thing that I think will bring a lot of people in, which would be great. Like, I'm now earning a share of these fees from holding this token. It creates a dividend like instrument that was done after the fact, like after it was launched. So I don't think there shouldn't be any securities issues there. Or at least not not from the initial launch of the token. But that's something I think that could be pretty interesting for DeFi as a whole. But I just haven't seen like any headlines or any news flow or anything really on fee switches. Just speculation. Yeah.
No. Like when Uniswap does it, I think it'll be meaningful. Like, it seems to be just the old ETH-based applications. In Sol, there's definitely value accrual happening. So the tokens are a way to realize the value from the activity on the chain. Uniswap, a couple of others have just not done that. But yeah, like it just it feels like once these things are potentially trading real world assets or financial product from TradFi, you've got institutional capital that's waiting to come into the space, and they're looking at, you mean I can trade on the CME, or I can trade in the ASX here in Australia, or I can go on chain and do it. And who's the equivalent of the CME or the ASX in crypto land? It's this DEX or this multi-DApp application that does lending and derivatives and spot, right? Which just you're starting to see. And like they're just like insanely profitable versus those old, the ICE and like the International Continental Exchange, like, well, I don't know if they own the New York Stock Exchange, but anyway, all the, Hong Kong Stock Exchange, the Australian Stock Exchange, the London Stock Exchange, like which businesses are more profitable and on a profitable and on a per employee basis, because it's really just a couple of developers. And then which ones are growing faster?
Yeah. So I think my kind of takeaway from the show where we came into with talking about Bitcoin dominance and how do we outperform Bitcoin. I think my takeaway is actually there's a handful of things to look at where charts are pretty much at the bottom, whether it's ETH BTC, whether it's this DeFi chart. And there are potentially some catalysts or narratives where we could see a reversal of that. Like, I'm not saying I'm just going to like full port ETH and that's going to be like my trade for the next few months, but I think for like a shorter term trade, it does feel like there are some good, like, maybe not like the best performing trade in the market, but trades where the downside feels like it's relatively capped right now, with some potential for reversal and momentum shifting along, paired with some fundamental catalysts. So I think that's something I'm going to look at. Like, I think I'm going to look at ETH. I think Radium screamed extremely cheap on that chart as well. I think that's another thing to look at as potential kind of like stories for coins that could perform if we do see Bitcoin dominance fall and altcoins do well. Because there are some real, like, especially with the DeFi stuff, that you can back that up with some real numbers. That's actual cash flows that are coming in. It's not just like a flowery narrative. And I think that's my main takeaway from this, which I hope is a bit more encouraging to people out there than the last show. That it does feel like there's some genuine opportunity there to, if you want to take some risk. I think there's some genuine opportunity there to have some positions on here, I think.
I'm disappointed you didn't try to show me some NFTs. Like, this was just a one-way street.
I think Raul will be even more disappointed in that than you will.
Yeah,
but,
likely.
I mean, NFTs once were like the Ethereum beta, so maybe that's the argument there. And I think ordinals did very well while Bitcoin rallied last year. So maybe that's a potential narrative there. But I'm as much as I want the NFT market to rebound, I'm not holding my breath on that one. So
tell me when all your mates have sold their NFTs, then they'll be like have to be like the contrarian signal and or contrarian. Exactly. Right. Well, with that, I think we're running up on time. So, Jamie, it was a pleasure once again to have you. I think internally we will decide whether we bring back Mando or keep with the positive momentum of this show. But we'll be back with REKT Vision at the usual time next week, 11:30 a.m. Eastern Time, 4:30 p.m. Greenwich Mean Time. I hope everyone had a good time watching the show, and let's hope we see some of this reversal that we're hoping for.
Yalla Habibi!
It's good to be here at the main blockchain event of this year.
You get to speak to the smartest people like you trying to figure this out, but also the people on stage. They're the experts. What more can you ask? It's a brilliant, brilliant event, and you'll come away with lots of new ideas and a better understanding of this incredible exponential world. So we get all of that, all in one place. See you at Token 2049 in Dubai.
Consensus Hong Kong 2025 is where the global crypto community converges to shape the next era of Web3. From February 18th through the 20th, Hong Kong becomes the meeting point for leaders across finance, technology, and digital assets. This isn't just a conference, it's where deals are made, partnerships are forged, and new opportunities emerge. Consensus features exclusive networking lounges, expert-led sessions, and invaluable insights from top industry voices. Whether you're expanding your network, building your brand, or closing your next big deal, this is the event that moves markets. Visit CoinDesk.com/consensus-HK to secure your spot and use Real Vision 15 for 15% off. Don't miss your chance to be part of the industry's defining moment.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.